Hey everybody, Paul Moore here from Bigger Pockets and Wellings Capital. I'm starting my third decade of real estate investing, and so I'm so happy to be here with you. I've done all kinds of things, including subdivisions, single-family flips, single-family rentals, multifamily. I've written 3 books on real estate investing, and the third one's about to come out from Bigger Pockets Publishing in a few months. So I'm really excited about the book on self-storage. It's actually called Storing Up Profits. And I'm really excited to be here with you today because you know, and I know that crisis brings opportunity. Did you know that some of the greatest companies in history and some of the greatest inventions were born on the back of crisis? General Electric started in the time of financial crisis, one of the largest corporations in the world. Marriott Hotels started right before the Great Depression, and they grew through the Great Depression. Apple and Microsoft started right on the end of the malaise of the 70s recession. And so some of the greatest things, some of the greatest inventions, innovations in history, some of your greatest opportunities are going to take place as a result of this crisis. But a lot of people are asking, hey, is it time to invest right now? I've been planning, I've been preparing, I've been planning to invest in real estate. Is this the time? And so I'm going to talk about that right now. I'm going to do a quick slideshow, and then we're going to get to Q&A. We're going to answer your questions. And so we'd love to know where you're from. So give us your name, tell us where you're from, tell us what you're up to, and then we'll get into questions in a little bit. So I'm going to call this Crisis Investing 101. Should investors try to find real estate deals now, or should we be waiting? So it's really hard to predict. I mean, one thing we know about every prediction, every forecast is that it's wrong. We just don't know how far off it is and by how much. Now, what doesn't matter as much is predicting what's going to happen. What matters most is building arcs, according to Warren Buffett, of course, referencing the Genesis flood story. So this is the Fear and Greed Index. Now, January 17th, it was at 89, which is extremely greedy, meaning people were extremely optimistic. You know, Warren Buffett's famous quote, be greedy when others are fearful and fearful when others are greedy. Now, what he meant by that is you need to be buying when others are panic selling, and you need to be selling when other people are buying up everything and paying too much. And that's how he's made his fortunes. Hundreds of billions of dollars at Berkshire Hathaway have been made because of that attitude. So just a few months ago, January 17th, there was an extreme 89% on the Fear and Greed Index. But check this out. Just 49 days later, we've got a situation where at 6. I mean, that's probably got to be one of the fastest drops of all time, maybe similar to the Great Depression if they would have been measuring that. Now, there are some smart people. Oh, I meant to mention, I'm going back to the slide. I want to thank Dave Steck. He is a private lender, and he provided a lot of these slides. They were run the last couple of weeks on Cama Plan's website. If you're looking for an IRA provider, by the way, our friends at Cama Plans do a great job. They're involved on Bigger Pockets as well. You can find Carl Fisher of Cama Plans on Bigger Pockets. So anyway, the Fear and Greed Index, March 6, 49 days later, was down at 6, which means people are terrified. But does this mean it's time to buy? Well, I don't think so. Not yet. And I'm going to tell you why in a few minutes. Now, there are some really smart people from Stanford who do Google Analytics. You know, a lot of the Google searches are basically public information. Google makes it available through Google Analytics. And you can predict human behavior based on the things that are searched, the phrases that are searched. And so Google searches for can't pay rent went up 1,000% from a few weeks ago. And can't pay mortgage, this slide, went up 900%. I think there might be some problems on the horizon. I mean, we all know what happened. I mean, obviously the coronavirus hit, the news kind of was squeaking out through January. And then in February, I saw my first person with a mask on an airplane on February 5th, I think. And then right after that, oil collapsed from $54 down to around $20 a barrel. And that is a huge, huge issue. I mean, for places like Houston, Baton Rouge, et cetera, but also for the whole economy. Consumers and small businesses weren't prepared for this type of downturn. I mean, look at this number of paychecks workers can miss before dipping into savings. 30% cannot miss a single paycheck. And another 20% can only miss one. And another 15% or so can only miss two. So basically 65%, almost 2/3 of Americans can't afford to miss even two paychecks. And how long can small businesses survive? Well, they're not much better. As you can see, 57% of them can only afford either less than 1 month or 1 to 3 months. So it's a pretty significant situation we're in right now. Of course, the government's involved bailing them out, bailing us out, as you know. The auto industry is collapsing. I mean, look at the auto sales, 22% down almost in Seattle, San Francisco, LA, et cetera. Home builder stocks closer to home for real estate investors are down, get this, 43 to 82%. Now, this is a leading indicator of what's going to be happening in the real estate business. Check this out, 43 to 82% down from the January, February peak to mid-March to March 18th. So pretty significant situation. Now, real estate is all local, right? You can't say that real estate is great or real estate is terrible across the board because it's all local. It's all about when and where you are. So check out Las Vegas, just as an example. Again, I thank Dave Steck from Access and Camera Plans. Real estate the median price for real estate in 2002 in Las Vegas was $147,000. Check this out. It was up to $287,000, almost double 5 years later. But in January 2012, it was down to $100,000. Then again in 2018, up to $260,000 and approaching $300,000 recently. Okay, so there are certain places where it's easier to lose a lot of money. But if you're a smart real estate investor, and I know you are because you're on Bigger Pockets and you're here today, you have the chance to make a whole lot of money if you can do one thing right, and that is timing. Timing is everything in this. And geography is important too, because there are sand states like Nevada, Arizona, California, and Florida that exhibit behavior like this almost every recession. In fact, my parents were telling me that this was happening in Florida back in the 1940s and 50s. So Florida hasn't changed. Florida's real estate, especially at the coast, performs, and Orlando performs very similar to Las Vegas. So let's look at economic cycles. Okay, so the consumer cycle is linked to psychology. And remember the fear and greed index we went over a few minutes ago. So this is sort of a cycle. And the question is, where are we now? We had optimism, in the around 2012, 13, 14. We had excitement, thrill, euphoria, a little bit of anxiety the last couple of years as we wondered if we were near the top. And then I think in this February, we quickly saw it go from anxiety to denial to fear to maybe depression or panic right now. Remember, 6 on the fear and greed index. But here's the thing. All recessions don't behave like this beautiful curve. Recessions look differently. So please, if you came today to try to figure out when to invest in real estate, please check out these next couple slides because they're really, really important. Okay. There's at least four different kinds of shapes for recessions. And the first one is a V-shaped recession. Now, this is the most optimistic possibility for the recession we're in. It means that there is a very sharp crash down, and we definitely saw that. And then it hits a bottom, a V-shaped bottom, and it starts increasing immediately. If this is the situation we're in, then you might want to be ready to start looking for real estate deals within 3 to 6 months, because it is clear we're on the downward slope. It's not clear when we hit bottom. In fact, you never can really know when you hit bottom until you look in the rearview mirror. It's much easier to see in the rearview mirror than it is through your windshield in general. So we don't really know if this is what will happen, but there's reasons to believe it will. Here's one reason. The economy was very sound before this virus hit. Unemployment was very low. Interest rates were favorable. Everything was going along well, and there were a lot of reasons to think that the economy would continue to go strong. We were in a 10 and a half year expansion, 10 years and 9 months to be exact, which is the longest expansion in US history. Yes, it did need to be adjusted, but the economy was very strong overall. So maybe we'll have a V-shaped recession. Now, here is another type of recession. We hope it's not this one. This is called a U-shaped recession. It doesn't look much like a U. And like I said, none of these are smooth. But this is the recession of the 70s. It went down, and then it just kind of teetered off the bottom. It kept bouncing off the bottom. A U-shaped recession, according to one economist, is like a bathtub. You slide into it, and then there's some bumps and gravel along the bottom. Not in my bathtub, but maybe in yours. I don't know. Maybe in that economist. And there's some bumps. You don't know what they are along the bottom, and then you slide out at the other side. So that is a U-shaped recession, and we're hoping we're not going to be in one of those. There's also a W-shaped recession, which is what we saw in the early 80s, which meant it went down once, back up, down again, and back up. So it looks sort of like an ugly W, and that's another possibility. And you got to be really careful of those, because you might get really optimistic, but you might go down into another hole, which means you need to be really, really careful coming out, because you don't want to take risky debt and make risky moves in case we're in a W situation. The worst of all recessions is more like a depression, and that's the L-shaped recession. Now, this is what Japan saw in 1990, and then it just kept going on and on and on. So an L-shaped recession could have the sharp drop on the front end or a smoother drop like this, but then it just kind of has a long, slow recovery, and sometimes doesn't even look like a recovery at all. And so if that's the situation we're in, well, we're in for a lot of trouble in the U.S. economy. So I'm not here to make a prediction about which one we're in, but I want to throw out the possibility that it could be any of these four or other ones. And so the question today is, what do we do? What do we do now? Do we buy? Do we go out and buy today? I got a friend who he's not a real estate investor, who euphorically called me the other day and said, I got a house. I got to be honest, it was really hard. He wanted a house for years for his family. I got to be honest, it was really hard for me to hide my disappointment, because I wanted to say, wow, if you would have waited 6 or 9 months, I think you could have got the same house for a lot cheaper and had a lot of choices of other houses for maybe even less, especially if you could go to the bank or the courthouse steps. So that's the same thing I would say to you. Before I end this slide presentation, I just wanted to throw out one more other slide. As people are talking about what to do, one thing I'm going to tell you that I'm hoping you're doing, and I'm hoping that I'm doing better, is spending time with family and those I love. You know, we've been in this long boom, and it's really easy to get too busy. And so I want to just point out this article in the Wall Street Journal several weeks ago. Mommy, I like coronavirus. And she went on, the little girl went on to say, I like coronavirus because I get to spend more time with you, mommy. So hopefully that's your situation as well. Hopefully you're spending more time with your kids, and hopefully more time with your family, those you love, those you care about, even if that's over the phone or FaceTime. But we're here to talk about real estate as well. And again, we don't want to talk about just predicting rain, because that doesn't matter much. We want to be like Noah, who actually predicted the rain and built the ark. We want to prepare. So today we're going to launch into some Q&A, and that will give us a chance to prepare for what's coming by hopefully building an ark. And so I would love to take your questions, your comments, and I'm going to open my comment box. Wow, there's a lot of you on here, so thank you so much. What's the answer to the title of the video? Cadence Power says. So Cadence, the answer in my mind is get your team together, get your tribe together. That means people who might want to invest with you. Get your team, get to know bankers, get to know other investors, pool your resources, and get ready for what could be the greatest buying opportunity of our recent lifetime. So thanks, Cadence. I wrote an article in Bigger Pockets. It came out Wednesday or Thursday this week, and it's talking about exactly what I think you should do. Robinson Anns, thank you, Robinson, for joining us. Hope, I love that. That's great. Can you overlay the 10-year charts for each of the recessions for the last 10 years? Yeah, I can't do that right now live, but I can tell you that we are right where, I'd say we're right now where we were in November of 2007, okay? Which was basically, we had come over the top of the roller coaster and we were just near the top of the steep drop, okay? So I'd say we're right now about where we were in November, December 2007, if you want to look at that chart, okay? So Erez Toker says, in your opinion, is it worth selling a rental with substantial equity, paying the depreciation recapture and capital gains to free up cash? Erez, I think what you could do, thank you for joining us, by the way, beautiful family. I would say that you could try to sell right now to free up cash. I love the idea of freeing up cash, but I don't know if you're going to be able to sell at top dollar right now. Again, we're in this 6 on the fear and greed index. You might want to put it on Craigslist or put it up with a realtor, see if you can sell it, still get what you were going to get. I sort of feel right now like it's not a great time to sell because there's not that many buyers, but I think it's better today, Erez, than it will be in a few months. So you could certainly try. Jonathan Vizbar says, would you say hold off on any purchases unless there's some kind of super good deal? Yeah, that's exactly what I think, Jonathan. I don't think there's going to be, especially apartments. Yeah, I don't think apartments are going to be at a great deal right now. I will say that my apartment broker friends have said that almost every deal they've had has went south. So there may be a few sellers right now who are panicking. Did you know 93% of apartments over 50 units are owned by corporations? And in general, they should not be panic selling right now. So I would say now isn't the best time to do it. Jonathan Vizbar again says, if you're in the middle of a 1031 exchange, is it better to take the hit right now? You know, the 1031 exchanges, by the way, were all extended till July 15th. So if you were, you got an extension if your dates were right. You can go look that up. Clued In says, what markets and cities will hold up best during the next market downturn? I would say probably tertiary cities in the southeast, in the southern Smile area, except maybe Arizona, Nevada part. The southeast, like Georgia, Alabama, South Carolina, North Carolina, places with net population migration that's really strong. Places like Austin, Texas, other places in Texas that are not related to oil and gas should do pretty well. And even Houston claims that only 11% of their economy is now tied to oil and gas. So we'll see how that goes in the in this upcoming recession. Dude Real Estate's joining us. That's Nate Shields. He's a Bigger Pocket blogger, and he's going to be answering some of your questions. Anything that you've asked already that didn't get answered, you might want to copy and paste back in, because there is no way I'm going to see it at this point since I have my slideshow going. But thanks, Dude Real Estate. Nate Shields, he's a great blogger and friend, so thank you. Ahmed Elias says, will rent drop simultaneously with home prices? Ahmed, like Warren Buffett said, he refuses to predict those kind of things, but everything in history tells us that that is going to be the case here. That's another Buffett quote. He said, if history tells us anything, it tells us that people don't know their history. So you Bigger Pockets folks are going to know your history, and I'm determined to at least help in any way that I could. Robinson Ann says, are there any pockets that would be interesting, any regions, etc.? I would like to hear from you all. I don't know. I think it's all going to be, I think we're all going to take a huge hit. That's just my opinion. I'm a hopeful kind of guy in general, but I just think the reality of this, looking at history, is that we're all going to take a huge hit. Robinson Ann says Atlanta and North Carolina, most people were moving to those low-cost locations. Yeah, look at Tennessee. Tennessee has 0 state sales tax or state tax, income tax. I think a lot of people have been moving there because of that. Isaac Galvin says, question. My parents are in the middle of a fix and rent. We were thinking about selling, but they don't want to. Should we finish it and hope for the best using last year's ARV, which is after repair value? Also, should we take out a loan? Isaac, I don't know enough about the details of your situation. It sounds like your parents, when you say they don't want to, you mean they don't want to sell. In other words, they want to fix it and rent it out. I would think renting, especially if you have a good amount of equity, would be a good thing to do through the coming downturn, unless you can get it finished and sold immediately. I really think one of the beauties of real estate is it is an incredibly, it's not like other markets. So think about it, equity markets. Stock prices change the same. They can drop by 10% while you're going to lunch. And, you could lose 10% of your portfolio if you're not careful. Gold and silver all around the world, the price is about the same. Oil prices about the same around the world. Real estate is completely different. It's fragmented, and you can get great deals in little pockets where you couldn't in other places. I've got self-storage and mobile home park deals. I've got a list of self-storage and mobile home park deals that I have access to that are off market, and they're much, much better than you could get if you were going on the market. And so there's fragmentation in real estate that makes it a beautiful thing, an incredible place to build wealth. Now, Warren Buffett creates his own fragmentation by being so good at reading financial statements and being able to find things that are anomalies. But real estate creates that opportunity for us. So I'm really glad you're all here. And Ricardo Morales, good vibes sending your way as well. Jonah Friedman, hi, do you think banks might freeze lines of credit? Yes, I think they might. I've got a lot of evidence that they've already started that. So if you want to make sure your line of credit doesn't get frozen, this won't fix it. This doesn't guarantee it won't get called, but you might want to take all the cash out of it, move it to a different bank, a completely different bank, and have that cash sitting over there. There's a theory out there that says you'll be better off and you'll have less chance of losing your line of credit and you're getting your cash called if it's in a different bank. I can't prove that. It depends how bad it is. It depends on the local bank, depends on their policies. If you don't have a line of credit, then it might be a really good time to go out and get one. because especially if you have a chance to get one from a local bank. Somebody asked, EJ or EL says, self-storage, pretty safe investment nowadays. Nikki is helping me with this presentation. Nikki, can you show my screen showing the how coronavirus hit commercial real estate? Self-storage is doing I'm even surprised. I wrote a book on self-storage. It's coming out soon. Like I said, I'm even surprised at how well self-storage is doing right now. It's some self-storage facilities. I talked to a self-storage owner for an hour and a half yesterday. He said he has record new rentals in March and April. And so I don't think that necessarily will continue. Again, I can't predict if it will continue to do as well through the whole recession, but it's doing really well now. So thanks, Nikki. Hey, everybody, give a shout out to Nikki Frick. She's our producer and wonderful Bigger Pockets, amazing social media guru. So Robinson Ann says, any investor pool you would recommend leveraging money to take advantage of the upcoming market decline? Yeah, I would get to know every investor you can locally. There's going to be people coming out of the stock market who are saying, I'm done. I don't want any more of this roller coaster nightmare. I'd rather invest in real estate. So try to find a local, build up a local tribe, become an expert, write, blog, podcast, do things like that to try to gain credibility. Find local IRA holders. You know, there's 401k. You know, you can corporate 401ks. You're allowed to withdraw $100,000 for up to 3 years now in this emergency. What if some of those people? What if you could get 5 corporate IRA people and you can put $50,000 out of each of them, and you get $250,000 to invest in several projects? I think that would be a great thing to do, especially if you're investing at the right time and in the right location. Cosmic Wisdom says, can I make that a full? I can make that a full screen if Nikki is willing to help me out with that. So there it is. You can see that self-storage is hit the least. Property declines since February 21st. I'm not seeing declines at all in the deals we're investing in. But again, that's what it's showing on a national basis, according to Green Street. And then you got senior housing showing a 49% decline. I'm having a hard time believing that. I mean, look at lodgings, 38%. Okay, I can believe that. Gaming, student housing, malls. I really doubt manufactured homes, all the ones we invest in, I really doubt that they're that low. So anyway, there's that. I'm going to take it off full screen, Nikki. Marco B says, question, will New York City multiple family houses go down 40 to 50% within the next 12 to 24 months? New York, Boston, LA, San Francisco, and a few other cities like that are considered gateway cities, Marco. And I really doubt if they'll go down that much. And even if they do, there's a solid, long-standing understanding from the 1800s on that, you know, that real estate in those types of cities, even though it does take huge hits, that it recovers, it bounces back. That's why people are willing to pay incredibly high amounts, very low cap rates. In other words, institutional investors from around the world love investing in those places. So I doubt it, but it's hard to say. Isaac Galvin says, the house we are fixing, we took a business line of credit and it's full. Due date is December. Do you think they can call it back? They could. But if it's due in December, chances are you'll still have it in December, most likely. Don A says, REITs, is it a good or bad idea to invest in these now? Well, REITs have taken a huge hit. And that's a real estate investment trust, which is a way for you as individuals, for all of us as individuals, to invest in large institutional real estate. They've taken a huge hit, and Warren Buffett would say, if he was a REIT investor, he would probably say, you're getting a chance to buy hope in America's future at a deep discount. So it might be a good time to buy a REIT. I'm not a personal fan of REIT. I personally like syndications because I can get to know the operator personally. I can call them, like the guy I spent an hour and a half on the phone with yesterday. He's an operator. We might invest with them. And so we have a personal relationship with them, which I couldn't do with a REIT typically. Where are we at? So Jonathan Cho says, what about HELOCs? Can they be called in if property values drop? Yes, they can. Should those be used to invest in a property? Jonathan, again, you have to make your own decisions, but I do. I have home equity line of credits, HELOCs, on my properties. And yes, I use them to invest. I've never had one called, never had one threatened. Even in the middle of 2008 crisis, I was able to keep all my HELOCs in place. So I think it's pretty likely. Likely that you'll be fine. However, if the bank really the bank doesn't want to operate real estate, right? Now, some people might think some banks do, but banks generally don't want to, and so they should not be, in my opinion, calling HELOCs, especially if this gets really, really bad. They'd probably be happier for you to keep the HELOC. They would keep making a profit and you could operate the real estate. They don't want it back in general. So Ramdino roaming the trails says, is it better to hold cash until we can get a great real estate deal or invest in an IRA now that the market is down? Well, you can do both. You can put cash in your IRA. And I'm a fan right now, if your cash is in your hands or in an IRA, that you hold off until the market's really down and you can get a much better deal. So thanks for joining us, Ramdino. But I think that we're going to see deals, especially in those sand states like Florida, Nevada, Arizona, California. I think we're going to see some of the best deals ever in the coming months. Now, when I say the coming months, I mean like 6 to 12 to 18 months, because again, real estate being fragmented and slower to respond than equities means the stock market could actually be on an incline going back up, but real estate may still be in its fall because real estate follows the stock market by quite a bit. Similede says, what about HELOCs? I already answered that. Sorry. Catherine Burse is talking to Dude Real Estate. Brian Scott is talking to Dude Real Estate. Okay. Bill Morgan VFL says, we're taking $100,000 out of our 401k with the CARES Act. Should we sit on the cash for 6 months or so looking for buy and hold properties for cash flow? Bill, that's exactly what I'd do. And everybody listening, Bill has hit it right on the head. I think you should, if you can, take $100,000 out of your 401k with the CARES Act sooner than later, because we know everything's changing quickly. And then I would look for buy and hold properties for cash flow. Folks, I last week somebody commented on my blog and said that they're in Florida. They have short-term vacation rentals and they're completely dead in the water. All their rentals canceled for the summer. And there are crickets on new potential rentals. By the way, I don't understand that. I think it's a good time to actually make a rental, a cancelable rental for maybe late summer. And we're going to do that in Michigan. Love Michigan in the summer. But anyway, I think it's going to be a great time to buy vacation property. If you ever wanted to do that would be the time to do it. David Crump says, what's your prediction time frame for when's the best time to buy? Do you predict an influx of homes for sale below market value or increase in foreclosures and REOs? Absolutely, yes, all the above. I predict that there will be a huge increase in foreclosures and real estate REOs as bank-owned property. And again, banks, get to know your local bankers. Get to know the REO department at your local credit union now. Take them to lunch, or at least virtually. But my prediction time frame would be 6 to 18 months. You'll see a real downturn. I don't know when it'll hit bottom. And again, according to my slides, it's really hard to tell. Cadence Power says, how long do you think the crash will last? Again, I just can't predict. It could be V-shaped. We might be coming out of it by the end of this year, which means real estate would still be lagging. You still have opportunities, but it could also go on for years. We don't know. And we don't know if the coronavirus will rear its ugly head again. Some other virus will pop out. We don't know if hyperinflation might kick in. I mean, people have been predicting that since the 70s. And now, I mean, I feel like we're at more risk than ever for that. Roger Brogan says, he's answering Cheryl Pepper. DL says, how can I learn to be a professional real estate investor? How can I learn to be a developer? How can I learn to be a builder? Would I have to learn how to do the work myself? DL, I don't know your situation. Thank you for joining us. Great question. This is the time, folks, to learn to do these things. If you've been dreaming about launching a new career, jumping into real estate full time, if you've been dreaming about doing something different, this is the time to go get educated. You probably don't have 10,000 hours to get, that's like, 10 hours a week for, what is that, 10 years? Maybe I did the math wrong, but anyway, it's a lot. But you probably don't have that much time to get educated right now, but it would be the time to get a crash course, get your team together, get your tribe together, get your relationships in line, get your financing in line, get your investors together, and listen to all the podcasts you can, read all the books you can, do all the Audible you can. This is not the time to watch Game of Thrones reruns. This is the time to quickly prepare yourself for what I believe will be the greatest buying opportunity maybe in our lives. Sil Will says, would you purchase a mobile home park right now? Absolutely. I sure would. In fact, I've got a list of off-market mobile home parks I'm looking at right now. Now, if you want to wait, here's why I would say buy sooner than later on mobile home parks. Mobile home parks have like doubled in value in the last 8 years. A lot of those people turned down offers because they wanted to wait till it got even higher. Now their spouse or their friends are saying, why didn't you take that offer 3 years ago? You should have taken that great offer. Some of them might go back and be in a fear and panic mode. A lot of the mom and pops might be ready to sell. I would say so well that I would wait a few months. I would wait a few months to see how this shakes out. But yeah, we're looking for those deals a few months from now to really hit. Thanks for joining. Great question. Witty Elite says, what are my chances of getting approved for the stimulus grant if my LLC is new? I think if your LLC was in place before January 31st, or was it January 1st of this year, you supposedly should be able to get a stimulus grant. Now, I've more recently heard they're going to base it on number of employees. And if you don't have employees and you don't have payroll to pay, that you might not be getting that. So I'm hearing different things. So there's a lot of information out there. Our Bigger Pockets friend, Neil Bawa, has shared a lot of information about that. Other people have shared a lot. You can go out and Google that. It's a huge topic right now, as you can imagine. Dude Real Estate, Nate Shields says it's a great way to start. Read books, attend real estate investor meetups virtually or whatever, and ask questions on the forums. Yeah, get involved in the forums. Brandon Turner's books, the new book by Brian Burke. I'm so excited for it to come out. The Hands-Off Real Estate Investor. If you want to raise money, check out Dave Van Horn has a book on raising Matt Faircloth has a book on raising private capital. That's on Bigger Pockets. I would definitely check that out. If you're not a Bigger Pockets Pro or Premium member, I would definitely check into that. There's all kinds of benefits, contracts, things you can get as a premium member that you don't have access to if you just log in. So I said Matt Faircloth for raising private capital. Dave Van Horn has a book on private notes. Private notes are going to be huge. They're already profitable in good times. How much better they're going to be in the times that are coming. So we've got a great opportunity right now. All digital books at biggerpockets.com/store are all $10 off, including Matt's wonderful book, Raising Private Capital. You can pre-order Brian Burke's book, The Hands-Off Investor, and there are all kinds of other wonderful books there, as you all know. Jonathan Cho says, thank you for answering my previous question. What leading indicators are influencing your 12-month estimate? Jonathan, one simple thing, history. I look at history even more than the leading indicators, like the home builders being so far down. History just tells us that there's going to be a 6 to 12 to 18-month lag in real estate. Tony Barbuto says, will the Fed bailing everybody out, with them bailing everyone out, do you really think that they will let the housing market crater? Everything's almost based on emotion, Tony. Great question. And I think things are going to crater whether the Fed bails people out or not, because it's based on fear and greed and all those type of things. I've got a friend who was on my podcast who was in Tampa, and I think he bought houses typically for 20 or 30 cents on the dollar in the last recession 11 years ago. And if I remember right, he said the bottom of that didn't hit till like 2012, even though the bottom for the stock market hit in 2009, as we all know. So, I mean, that could be a 2 or 3 year delay there. So, but yeah, fear and dread take over, fear and greed take over, regardless of whatever else is happening. Tony, okay, so Levi Karen says, what would you do with $300,000 cash in the next 6 months? Levi, it depends what your goals are. Great question. If you want to be a hands-on investor, I would actually just be looking for deals, especially in those markets that have the huge ups and the huge downs. Okay, so that's what I would be doing. If you're a hands-off investor, I would consider looking for deals I would consider right now being interviewing syndicators to invest heavily with. And I would spread that 300,000 out among maybe 3 or 6 syndicators, $50,000 to $100,000 each if you're hands off. Matthew Mullen says, what markets do you like for single family rental investing? Indianapolis, Memphis, Austin, Dallas, Houston have been great markets for single family rentals. So those would be places that I would certainly consider, but there's all kinds of other ones as well. If you can buy right in, say, 12 to 18 months in Orlando or Tampa or St. Petersburg or Miami, I mean, if you're seeing those prices drop like they usually do to like less than half of what they were at their peak, to me, that would be a great time to buy. I mean, if Warren Buffett was in real estate, he would be buying those all day long, in my opinion. Jason Bollinger says, if there's hyperinflation, wouldn't that mean that we should buy now because the values will skyrocket due to inflated dollar amounts? Yes, Jason. Yes. Great point. I still think that there's an opportunity that's going to come up that makes it even better. And I think if you want to do what Buffett says, and that is increase your margin of safety, you can buy in 3 to 6 to 12 months. By the way, hyperinflation may never happen, but if it does, I mean, there's no reason to believe it's just going to start like next month. I mean, it could. That's how it always happens. It always happens without warning. If you study history, and if you study, the South American countries that had huge hyperinflation, it started without warning. I mean, literally in Germany in 1933, in the Weimar Republic, 1 week a loaf of bread cost a certain number of marks, and literally within a month, people had to wheel a wheelbarrow of cash to buy that same loaf of bread. And I'm talking within a month. So it just happens overnight. But you make a great point, and I have to admit that. On the other hand, I will say that the government will tie, they will probably index mortgages, at least from banks, to the hyperinflation rate. So if hyperinflation goes up, if your cash is devalued at 1,000%, chances are your mortgage will follow, which means that will keep the banks in business. So Chizibo Efora says, sorry, I mispronounced that. Please forgive me. Chizoba Efore says, how can I find quadplexes in the Houston area? You're going to have your chance. Get to know real estate brokers right now. Join your local real estate meetups right now, or at least as soon as you can. get to know real estate brokers that deal with those type of things. I would probably avoid the far east part of Houston and the far west I-10 corridor in Houston, unless those crater even more than usual because of the double hit between the economy in general and the oil prices and the oil production on the east side. Those might be great places to buy. You might be able to even get better deals in those areas. So maybe you shouldn't avoid them, but I would avoid them right now because, like I said, things are just not anywhere near the bottom at this point. No way. Henry Johnson says our family's in the process of selling their property for $5.7 million and looking to do a 1031 exchange. How would you advise? What type of property would you target? Henry, if you can time that, if there's any way you can time it, just to hold on a little bit longer. Of course, I know the 1031 only has a 45-day naming window, plus the bonus time the federal government just granted them. So you probably can't. If you have to bail out of that, in other words, if you can't find a property you want to buy, you can always, first of all, you can do an installment sale, or you could do a deferred sales trust. And Henry, you can reach out to me if you want to know more about that. You can just ping me, Paul Moore at Bigger Pockets. Anyway, you could also do a deferred sales trust. You could also do another type of DST called a Delaware Statutory Trust. These would be places you could park your money to hold on to your 1031 exchange. And hopefully you could get into a Delaware Statutory Trust where you could actually get out whenever you're ready to get out, get your cash and move on something else, but still maintain your 1031 exchange. We can talk about that. We at our company talk about this all the time. So if you want to reach out, Henry, get on my schedule. We can chat about that. Cheryl Pepper says, understand, but question is how much will you lose if you don't finish versus finishing, getting rental income coming in sooner versus getting nothing? Cheryl, I forgot your original question. I'm so sorry. I'm just going to punt on this one. Can you just ask the entire question in one panel? Because I missed your first part. Robinson Ann says, are you hiring scouts? Would be interested in learning the market through hands-on experiencing, learning how to find deals, etc. Robinson, yeah, reach out to me. I do know of some opportunities out there right now. There's going to be a lot. The average real estate agent only makes $41,000 a year. There's going to be a lot, and I mean like over half of the realtors out there are likely going to be in real trouble during this upcoming time. And I think that this is going to be a time, if you need to hire somebody, you might be able to find a pretty good real estate agent for less than normal market value. Joanna Cabin says, do you mean mobile home parks or just units? I'm a huge fan, Joanna, thanks for the question, of mobile home parks. And I'm a huge anti-fan of individual mobile homes. I'll leave it at that. You can get my special report on mobile home park investing, and I can tell you why I feel that way. By the way, wholesaling or flipping mobile homes, that's fine. If you've got a definite seller and a definite buyer, you want to be in the middle and make $5,000 flipping it, sure, that's fine. Holding it, renting it long-term, I would not do it for so many reasons. Well, we only have 12 minutes left, so I'm going to go into the fire round. Where's the sirens, Nikki? I'm kidding. What's your best advice? So I'm going to answer every question I can as fast as I can. Tristan Church says, what's your best advice on trying to take a home equity loan or a HELOC? It's going to be harder during the downturn. My best advice is go to the smallest local bank you can, a no-name bank, a credit union, and do it as soon as you possibly can. I'd be on the phone Monday morning at 9 a.m. to try to get that done. Marty says, if you recommend to take a buy and hold approach for cash flow, but think rents will begin to decline, what adjustment would you make when the lower rent when qualifying for the property? Yeah, I would actually consider, depending on where you are, maybe just make sure it still works. Make sure there's a good debt coverage ratio, DCR, or debt service coverage ratio, DSCR. Make sure you're well above 1.20, even if you have a 25% hit in rents. That's my quick answer for that. Javier says top 3 books for a beginner to get into real estate investing. Javier, I'm sorry, I pronounced your name wrong. Silly me. There's so many. It depends what you want to get into specifically. Reach out to me. Tell me what you want to get into, and I'll try to give you an answer. I really like The One Thing by Gary Keller. Also, Gary Keller's book on commercial real estate investing. Those are both really good. The One Thing's not about real estate. It's about life management. I'm looking at my shelf over there. There's a $600 book I got called The Complete Guide to Commercial Real Estate. It's so big, it needs a binder. It's really good. There's the Brandon Turner books on real estate investing, David Green's books on real estate investing. Bigger Pockets has the best selection of hands-on real-world advice that you might ever need. So go to Bigger Pockets bookstore. Mikhail Hunter, I'm sorry, Don Zukowski says, I have a single family in Dallas. The lease is up end of June. Should I sell or keep renting? It's going to be really hard to sell. Don, if you can sell, get the cash and be ready for the downturn. If you can do that right now, I would. That's just what I would say. Mikhail Hunter says the U.S. raises the power of its currency against other countries, so we'll be good. No hyperinflation. You know, Mikhail, I hope you're right. I think you might very well be right. We'll just inflate other countries' economies. Well, there's a theory out there about people who are trying to make sure that the U.S. currency is no longer the standard, and that could possibly get in the way of that. But I do agree that that's probably true. The whole world benefits if the U.S. dollar is stable, and you're probably right. EL says, isn't there a shortage of housing? So why would real estate go down right now? Just history. Yeah. Fear and dread, fear and greed, all those cycles. If you haven't got it, I always recommend Howard Marks' book. That's Howard Marks from Oak Tree Capital. You can check out Mastering the Market Cycle, Getting the Odds in Your Favor by Howard Marks, and he will tell you the answer to your question in much more detail. So Will says, how much would I need to purchase my first mobile home park? I would like one with at least 50 lots. So you can often get owner financing. I know one right now in Tennessee with about 50 lots that I think you could get for $100,000 down, but you'd also have to have the cash to fix it up. So that would be my quick answer on that. You could probably get owner financing on it. Stephen Jones says, with the future of many businesses going virtual and less use for physical space, for example, movie theaters, does that permanently negatively affect commercial real estate? Stephen, great question. Thank you for asking. We just don't know yet. We just don't know what we don't know. I was on a conference call with the brilliant Chad Corbett yesterday, who was talking about repurposing large commercial buildings into senior living. I would never have expected that, but Chad's got a plan to do that. If you want to check out Chad, he's on all over Bigger Pockets. And he also has a probate real estate site called All the Leads. He's got all kinds of different things that you can benefit from. Adrian Bonilla says, would this correction affect different? How would this affect different markets, big city versus smaller? Historically, smaller markets like Roanoke, Virginia, Lynchburg, Virginia, Charlottesville, Blacksburg, Virginia, those are all 5 near me. Is that 5? Anyway, Nikki, help me count. They've typically done better. They haven't risen as much in great times, and they haven't dropped as much in bad times. So that's my quick answer on that. 10 Genesis 3:8. Hey, welcome back. What should you know about your local lender? What requirements would a lender look for regarding the best investments? I would do a lot of homework on that, do some podcasts on that, get really knowledgeable about the terminology, and then get hold of a local lender and ask them for their details. Javier says rentals. Okay, great. Kristen Berry, real estate professional. Hey, Kristen, you're in the Detroit area. I lived there for 10 years. I was actually in Royal Oak. I'm in the Detroit area and feel that many people will move south due to being able to work remotely. Is there a good area other than Michigan? Yeah, check out South Carolina, check out Tennessee. I would think that those would be great locations to consider. We have 5 minutes left, so I'm going to go even faster now. Catherine Burr says, I saw where a poster pulled money out of his 401k. How do I find out more information? Catherine, great question. Thank you for asking. It's all over the internet right now. I've seen probably 3 webinars advertised this week alone. One from Neil Bawa, B-A-W-A. He's a friend of ours, a Bigger Pockets poster, and so many others. Randy Lowe says, question, would it be good to move to buy a multifamily complex during these times? And can you raise rent? I don't think you can raise rent right now, but I think if you can wait 3 to 6 months or 12 months, you're going to be able to find some great multifamily deals. Yes, absolutely. Then you'll be able to raise some rents later. Yale says our tax lien's a good idea right now. I don't know. I know a little bit about tax liens. I would say it might be a good time to get into that because there's going to be a lot of people walking away. What's your opinion about the Columbus, Ohio rental market, 2 to 4 units? Earl, I really like the High Street area from Short North up through Worthington and Westerville area, kind of like that High Street corridor, because Ohio State is always going to be there. Now, there's a question, will colleges and universities go more online in the future? Liberty University, certainly in my town is. But I really like that Central Ohio, that Central District. The east side has been kind of choppy north of Broad Street up there to Gahanna, not as much. Dublin has been pretty strong over the years, not so much from college students, but more from professors and other professionals. So that's kind of what I'd say about Columbus, Ohio. Roger Brogan says, unfortunately, it needs, okay, I'm not going to be able to answer that one because I didn't catch the context. How do you see this environment affecting rentals overall? Thanks for the question, Carl. Carl, do you really look that way? I'm just kidding. How do I see? I think it's going to drop rents. I think rents are going to soften. I think there's going to be incredible opportunities. Right now, if I was moving and had full freedom to go anywhere I wanted, I would move into an Airbnb and rent it month to month at a very low price, because Airbnbs, unfortunately, are dead in the water right now from everything I've heard. And so I would move into the Airbnb and just sit and wait month to month until you could pounce on the deal of a lifetime. I think it's going to happen within a year and a half. Arnold Barajas says, I need some investors. I have a few people about to lose their place. It's okay. So anybody want to respond to Arnold? That'd be great. Lance K says, there is not such a thing as a bad time to invest if the deal is right. I agree. That's a great question. Okay, Cheryl, thank you. Justin Ward says, with Japan's shrinking population plus coronavirus and the Tokyo Olympics delayed, what do you think about investing in apartments for cash flow in Tokyo in the next 6 to 18 months? I feel for me, there's so much risk in investing in general that adding another country's currency risk and another country's economics to it is just scary as heck for me. Now, in my 20s, I would have loved it. That would seem like a really good idea. But in my 50s, honestly, I'm a little more frightened of it. There's a great saying by Buffett that says, what the wise do in the beginning, fools do in the end. Think about that. That doesn't just apply to the Tokyo question. It applies to everything. I'm only going to answer a few more. Ryan Beatty says, would you advise for or against a cash out refi to purchase an investment property on your primary residence if you only plan to stay there 2 or 3 years? Yes, I would do it if you can. As long as, the economics make sense. You can do the math on whether you'll pay it back in 2 to 3 years. You can often, especially if you're getting a line of credit. By the way, I'd always recommend getting a home equity line of credit as your first mortgage. Always recommend it. And that's the only way I would do a mortgage from now on. Now that I've learned some really cool economic things you can do with a HELOC. Okay, that's it. So thank you so much. There's dozens and dozens of questions I didn't get to, and I'm really sorry for that. You can reach out to me. My name is Paul, Paul, Moore, Moore. I am honored to be here with you all. I can't believe I get to do this. Thanks so much, Nikki. Thanks, Zach. Thanks, Bigger Pockets, for making this forum possible. If you liked this video, please give it a thumbs up, a like, or a share. We're trying to get this word out to more investors, more people, more stock market people who want to switch, get their money out from under their lumpy mattress and invest in something beautiful. So I'm going to leave you one more time with Warren Buffett's wonderful comment that predicting rain doesn't count. Building arcs does. It's time for you to build an arc because the rain is here. It's coming. It's going to come harder. And it's time for you and me to build that arc and to do that, follow that dream, build that future that we always dreamed of, but never thought we would. Now's the time. Bigger Pockets is the place to get all the information, make all the connections, get all the education you need to do that. Thanks, everybody. We'll see you here next weekend at biggerpockets.com.